Hey, what's up everybody? Welcome back to Creator Crypto. So I want to do a video today just talking about the distinction between Bitcoin and crypto that you should be making when you think about the space as a whole. You'll hear influential people use the terms interchangeably, but they're not the same thing. Before we hopped into that, I did want to go to the charts real fast and just kind of see where things sit right now. So you can see we dropped below the 200-week moving average, 7 or 8 days ago, and that's where we sit today. We're down a little bit today. The most recent period to compare that to is this period right, as the pandemic onset, right? You saw this candle close below the 200-week moving average. It spent 6 or 7 days below there before it climbed out, and then we saw kind of the meteoric rise ever since, and then the subsequent fall back down. Now, I do expect us just to hang out here for a while. I don't expect an immediate climb back out of here. In fact, given the macro environment, there's going to need to be a pretty significant catalyst to give this thing some rocket fuel and get people to come back in. People are conservative, they're scared, and the environment just doesn't look very conducive right now. People are trying to figure out what's next. I'm buying here, but I wouldn't be surprised to see the price drop back into the teens. I think we saw 17.6 recently. It wicked down here to 17.5, 17.6. If that happens, I'd be a strong buyer. I've been DCAing in for some time here, but I do think it's a good time to buy, not financial advice. So I'm optimistic. Haven't lost any conviction in Bitcoin. Bitcoin is a decentralized protocol. And we're going to talk more about that, but if anything, I've gained conviction given world events. It's just kind of proven the Bitcoiner theory out. Each day seems to bring something new. But I did want to point to some specific examples of why you should be thinking of Bitcoin as distinct from the larger crypto community. Now, again, like I said, influential people will use the terms interchangeably, but they're not the same thing. So to illustrate that, Celsius was a large DeFi network that aims to provide a platform of curated services that have been abandoned by big banks like fair yield, zero fees, lightning quick transactions, etc. Now the main attraction they offered was this fair yield. I think they were offering 19%, which has a lot of allure to it. That's a huge number, right? Never mind how they're achieving that yield, right? Which is the question you should be asking. How are they achieving that? But I wanted to highlight the way in which decentralized finance in its current form is not exactly decentralized. So if you're smart enough to read the user terms, you'll see that by agreeing to use their rewards program and to earn that 19% that I was talking about, this is what you're acknowledging. You're acknowledging that you won't be able to exercise ownership of the assets that you put into the protocol. Celsius will be able to profit off of them, and you won't have any rights to that either. And in the event everything goes south, your digital assets may not be recoverable. This just happened. Number 3 just happened, right? So they had essentially what equates to a bank run. Everybody lost confidence in the protocol, and people rushed for the doors, right? And they locked down everything to avoid that. So you got people with a not insignificant part of their wealth locked up in someone else's protocol, and they agreed to it because of the user terms. Bitcoin doesn't have user terms, right? It's a protocol. Nobody owns it. There's no board. There's not a legal team crafting terms of agreement. It's just a protocol that exists. It does what it does. It mines blocks every 10 minutes and appends transactions to the ledger. That's it. Nobody can change the code unless there's a massive consensus, right? The more people that believe in Bitcoin, the more valuable the network becomes. The fewer people that believe in it, the less valuable it becomes. It's as simple as that. It's the network effects, right? If you think about a cellular network, it's not very valuable if you're the only one on it. But if everybody's on it and using it, it's immensely valuable. It can change the way things work, and it can mitigate a lot of the macro risk that we see today because of reckless monetary and fiscal policy. Another example I wanted to point to was, this happened the other day, is Salind. It's a DeFi protocol built on Solana. Now, they took a vote of stakeholders, and the stakeholders voted to freeze the account of a whale investor that had so much money and was a leveraged trader that if it were to be liquidated, could bring the whole network to its knees. Now, they afterwards reversed course and did not do this fortunately. But the very fact that they can do this is the thing I wanted to highlight. There's a board. There are stakeholders. They can change this. They can take away your rights as an individual in order to preserve the network. This starts to sound an awful lot like traditional finance, where you have big centralized companies with teams behind closed doors making decisions, like being able to take away someone's rights. The whole idea behind the decentralized finance and larger cryptocurrency movement was to not do things like this. So I bring those two examples to highlight that Bitcoin, you can't do this. There's no board. The protocol is an elegant design that doesn't allow for this, right? Stakeholders can't vote to freeze your account. If you have the keys, you have the private keys to your account, then it's secure as anything out there, right? No one can just take that away. They can't move or liquidate you without your authorization. Now, again, like I said, the more people believe in the Bitcoin network, the more valuable it becomes. And people are starting to understand it a little bit more as they gain knowledge and understanding. The network is growing in value. That will continue to happen. Companies are integrating each day with the network. They're figuring out how to use it, and the infrastructure is maturing. So again, when you think about crypto, there's Bitcoin. Bitcoin doesn't have any peers. And then there's a bunch of other crypto protocols and blockchains that may or may not last. They may or may not prove that they have any value to offer you as a consumer. I would caution you when you look at these. If it sounds too good to be true, it probably is. But Bitcoin is not too good to be true. You can see it all. It's a sound design. It's truly decentralized, and the only decentralized protocol out there. So that's it for today, everybody. Thanks for joining. And until next time, cheers.